Ever grab a coffee, tap your phone, and walk out without a second thought? It feels like magic, right? Well, welcome to this explainer where we're going to completely dismantle that illusion. Today, we're diving deep into the massive, multi-layered technological stack that actually makes your digital payments work. We tend to view payments as just simple taps and clicks, but the infrastructure making those moments possible is an incredibly fascinating, high-stakes ecosystem.
So we're taking a zoom-out journey. We'll start with a single tap and work our way all the way out to global cross-border networks and the future of the financial system. We're going to cover the illusion of the tap, the processing pipelines, the real-time gauntlet, the cross-border journey, fraud and regulation, and finally, next-gen frontiers. Let's get right into it.
Part 1. The illusion of the tap. As you'll see, that frictionless experience at the checkout counter is actually hiding some serious complexity. Think about it. Cards are swiping 24 hours a day, 7 days a week, all over the planet. But banks, they aren't perfect. They constantly experience outages, connectivity issues, and routine server maintenance. So what keeps global commerce from just grinding to a complete halt when your bank suddenly goes dark and can't answer the call?
That brings us to SITP, or stand-in processing. This is literally the invisible safety net of the global payments ecosystem. When your bank drops offline, networks like Visa or Mastercard don't just awkwardly decline your card. Instead, they temporarily step right in and make the authorization decision on the bank's behalf. They use a strict set of predefined rules and risk parameters to keep transactions flowing. This prevents mass declines, saves merchants from losing revenue, and totally preserves your experience. When SITP works perfectly, you literally never even know it happened. Let's step back from that microscopic backup plan and look at part 2. The processing pipelines, where all this global money actually travels. When we zoom out, the whole global financial system essentially runs on 7 distinct payment rails. And here's the key. Each one is optimized for completely different use cases, settlement models, and regulatory frameworks. We've got SWIFT for the big cross-border transfers. We have SEPA for Europe. We've got the legacy card schemes for global consumers, modern real-time payments for domestic around-the-clock transfers. Then you have wallets abstracting the tech, crypto and blockchain for peer-to-peer, and of course, stablecoins. There is absolutely no single rail that fits every need. And the contrast between these systems is absolutely wild. Take a look. On one side, legacy card schemes give you the illusion of speed with an instant authorization at the counter. But the actual money, the real settlement of those funds, takes 1 or 2 business days to move. On the other side, you have modern real-time payments, like FedNow or UPI. These are domestic account-to-account transfers that settle the actual money instantly, in seconds, 365 days a year, and usually at a super low cost. Which leads us perfectly into part 3, the real-time compliance gauntlet. What does settling in seconds actually look like when we peel back the curtain? Because moving money isn't just about speed anymore. It's about rich data and automated security. A real-time payment is actually a massive 19-step gauntlet condensed here into 6 primary stages. It kicks off with initiation, moves to exchanging incredibly rich data using modern ISO 20002 messaging standards. Then it hits intense anti-money laundering and sanctions checks before it clears, settles, reconciles, and fires off a notification. It's handling syntax, data validation, and liquidity updates completely invisibly. And here is the mind-blowing part. Every single one of those complex micro-operations, the compliance algorithms, the messaging protocols, all of it happens successfully in under 2 seconds. Instant payments are just as much about data algorithms approving transfers in milliseconds as they are about the actual speed of the cash. So that's domestic. But what about part 4, the cross-border pain point? Things get incredibly slow and expensive when money actually has to physically cross national borders. When money crosses a border, it's no longer just a simple transfer. It's an agonizingly complex relay race of correspondent bank handoffs. A customer initiates the payment, it goes through fraud screening, a specific message like an MT103 gets generated, and then it's routed. The funds have to physically move through a chain of intermediary accounts, known as Nostro and Vostro accounts, before finally getting to the destination and generating a status confirmation. And to pull this off, the SWIFT network strings together a highly fragmented web of over 11,000 banks across more than 200 countries. This is exactly why international transfers suffer from such massive friction. Because your money is hopping through intermediary banks and foreign exchange desks, losing time and picking up fees at literally every single stop, these payments can take anywhere from 1 to 5 days to clear. It's kind of crazy, right? We can beam high-def video across the planet instantly, but sending money takes a week. And because of all those intermediary hops, fees are basically inevitable. These charge bearers dictate exactly who foots the bill. You can choose SHA to share the fees, OUR if the sender wants to cover everything so the exact right amount arrives, or BN if the person receiving the money is going to absorb all those intermediary costs.
Which brings us to part 5, fraud, friction, and regulatory reality. With all this money flying around on these complex rails, things inevitably go sideways. And regulators are really stepping up to protect consumers here. For example, the Reserve Bank of India has finalized some strict new timelines, including a vital shadow reversal mechanism for credit card fraud. Basically, if a customer reports fraud within 5 days, the bank has to provide a provisional credit for that disputed amount within another 5 days, even before they finish their investigation. From there, domestic disputes have to be resolved in 45 days and cross-border in 60 days.
This new framework is a total game changer. It drastically expands the protective umbrella, offering up to 25,000 rupees in compensation for 50,000 rupee losses. And get this, the RBI itself is funding 65% of that compensation. Notably, this expands coverage to small business owners, covers complex cross-border fraud for the very first time, and tightens SMS alert thresholds. Regulators are forcing transparency onto the pipelines so that as money moves faster, your protections actually scale right alongside it.
But as the rules get tighter, the tech gets smarter. Welcome to Part 6, Next-Gen Financial Frontiers. Technology is actively evolving to bypass these historical choke points completely. Next-gen rails like fiat-backed stablecoins are bridging traditional finance and digital assets. They allow programmable money to move cross-border in seconds at a fraction of the cost, completely skipping that old correspondent banking chain. We're also seeing the massive rise of blockchain for pure peer-to-peer transfer and the absolutely crucial development of smart orchestration. Because at the end of the day, modern financial institutions have to operate across SWIFT, cards, and blockchain, all at the exact same time. They're using smart orchestration routers to automatically choose the cheapest and fastest path for any given transaction in real time. The payment rails are just being embedded right into the software we use every single day. To wrap this all up, I want you to remember this. The user interface of money has become instant and invisible, but the underlying infrastructure is a complex battleground of legacy networks, real-time data protocols, and regulatory systems. The winners of the digital economy are those who master the underlying rails, data, and orchestration. Money isn't just currency anymore, it's rich data moving at light speed, orchestrated by incredibly intelligent systems. So the next time you tap your phone to pay for that coffee, ask yourself, which invisible rails is your money riding on today?